Hello everyone. In this video, I want to talk about some articles, papers, and news that were interesting to me last week. So let's go through it, and I'll start from Proprietary AMMs and Ethereum by Mike Neuder and Marian Barani. And this is an article I advise if you care about prop AMMs. Maybe you heard about this word, and it's maybe not super clear what prop AMMs are. Well, this is good. This is a good article. It starts from the beginning, what is an AMM, and goes step by step towards defining the functioning of a prop AMM. Who are the different actors, from the user to the website to the protocol to the prop AMM operator. So yeah, this is nice. Let's go to the prop AMM section, but all this is very useful to get there step by step. And it is shown first the diagram on how this works, for instance, on Solana. So you have the user, you have the aggregator, you have the network, and then you have the proprietary AMM operator, or anyway, the entity behind this prop AMM, the market maker. Because at the end of the day, what is a prop AMM? Like the diagram, when you compare to the actual AMM, the passive AMM, it's not very different. The difference is that the automatic in AMM for the standard passive AMM, automatic means also passive, while here this is still automatic in a sense, but it's not passive at all. There is an active player, there is a market maker that is continuously updating the price of the assets that are traded in this pool. So in a passive AMM, the price depends on the ratio between the assets deposited in this liquidity pool. In the active, so proprietary AMM, you still have a contract on chain from which you can get the price, but the price is updated continuously by the market maker. Market maker is sending oracle updates. I mean, that's also, so prop AMM terminology is a bit weird to me, but okay, no problem. But yeah, the oracle, who's the oracle? Is the market maker. Market maker is pushing price updates. And that works, and it worked very well on Solana, because these updating Oracle operations can be cheap enough. Not only they can be cheap enough, but also the market maker has some guarantees on the fact that these updates will have priority. Why? Because where we have this is that, yes, by default, Solana uses a greedy algorithm to include the highest fee per compute unit transactions. This is the default. And if you trust that validators are enforcing the default, then you can pay high fee per compute unit, because the compute unit of an Oracle update is very low. So you still have this kind of efficiency in updating the price. And that's what the Solana market makers know, and it has been working. Prop AMMs on Solana were able or are able to offer tight spreads and good execution. The question is, can this work also on Ethereum? And there are different problems here that you can imagine. So first of all, while in Solana the transactions are the blocks are continuously streamed through shreds, and you can update the prices, and you can react on the information that you receive while you receive shreds on the new price and so on. So block building is continuous in a sense. On Ethereum, that's not how it works. And it's more like, there is this discrete progress, 12 seconds by 12 seconds. And that's not ideal. But yes, there is a solution, and what is being done right now on Ethereum, because we have prop AMMs for Ethereum, instead of waiting for the block, you go directly to the block builder and work directly with the block builder if you're an if you're a prop AMM operator. So what do? You go to Titan, you go to Quasar, they also offer this service. And basically, as a market maker, you send price updates directly to the block builder continuously. And basically, the builder is promising you to order transactions and give priority to your updates in a way that is preserving efficiency, both for makers and takers. So there is a sort of trust in the builder, but this trust is based on the fact that this is profitable for everybody, basically. Now, nothing about Oracle updates is enforceable by the protocol. This is true both on Solana and on Ethereum. And the question is, can we do something better? But for now, this is working. We do have Prop AMMs operators, Prop AMMs working. And in this dashboard, it's very nice because you can compare, for instance, the spread on certain pairs like ETH to USDC, and you can compare the performance in terms of how tight the spread is between Prop AMMs or Ethereum and Binance and UniV3. This is the widest one in UniV3. Then you have Binance in orange, and you have these Prop AMMs on Ethereum, basically quoting a tighter spread than Binance even. So this is working, and it's kept working by block builders. And now the question is, of course, if you have to work together with block builders, you need to work with all builders. Now, Titan is building huge amounts of blocks, like more than 50%, but it's still not all the blocks. And so it's weird, like, what if next block is not built by Titan? What do you do as a Prop AMM? Or the users will get worse prices randomly depending on who's building. It's not ideal. And also, at the end of the day, you still trust the builder. Anyway, this trust is out of protocol completely. So it would be nicer to have this kind of application control execution, ACE, directly in protocol. Because now, yes, there is ACE, but it's enforced by Titan, right? And the idea is, can we do it in protocol? Can we have censorship resistance in protocol? Because you need that to remove trust on the builder and proposer. If you're an automated market maker, a Prop AMM operator, you need to know that your price update will get included and effective as soon as possible, and it will not be censored. So these guarantees you can only have with real censorship resistance and in-protocol application control execution. So for censorship resistance, we have MCP MCP upgrades, multiple concurrent proposers coming in Solana. This is Constellation, from ANSA. And then we have Fossil coming with Hegota upgrade in Ethereum. But this is also not the solution because it's not guaranteed to be at the top of the block, to have your price update at the top of the block. So not ideal, but anyway, all this to say, Prop AMMs are real and they're happening in Ethereum. They rely on builders, so working together with the builders, but it's a technical solution that is working and is growing also. So it is also important. So Prop AMM volume in Ethereum is increasing and you can get good price on chain. That's what I wanted to say. And for the details, really, this good article. So let's move next topic. I have this paper, Unruly by Design, Fee Volatility and Strategic Attacks in Bitcoin Mining. All right. Interesting. Macro topic here is security budget, sustainability, mining behavior. This is always super interesting because for Bitcoin, there is this assumption, or anyway, it's part of the parameters, of the security parameters of the protocol, that more than 50%, so 51% of the miners are supposed to be honest in the sense that they are assumed to build on the chain with the largest work, with the most accrued work. So in simplified way, longest chain, but it's not longest chain, it's the most work accumulated in the chain. If you have 51% of the miners doing that, then the protocol works nicely. There are no double spans, there are no conflicting chains and chain splits and so on. So that's the idea, and I said they're supposed to be honest, but honest doesn't mean like you shouldn't see honest like out of goodwill. The honesty here just means that they follow this rule, and it's also very clear that this rule is strongly incentivized, and that's why the protocol works, by the fact that it's supposed to be also the most profitable thing to do for a miner, to build on the chain with the most work. And why is that? Because, yes, they are incentivized by subsidy and fees. Subsidy is Bitcoin mining, so the Coinbase, the new BTC that is minted and given to the miner, and from transaction fees. Now, the problem here, studied by the paper, is the impact of fee volatility, because the idea is that if one block has very high transaction fees, and the next block, and it was mined, let's say it was mined, but the next block is supposed to have extremely low transaction fees, that's what you expect. Maybe instead of building on the block with high fees that was mined, it's more profitable to remine that block with high fees and then mine the following block. It's it's a bit of a gamble. You're not sure that you will be able to remine that block and then mine also the new block and get your chain, your fork to become the canonical chain. But you can calculate the odds of doing that, and it could be profitable. That's the idea in principle, and it's known. I mean, it's not new, the idea. What's new in this paper is that it was studied whether this was actually done, and the findings are that, yes, it happened, which is good because we know we are not talking only about things that will happen in the far future, or we don't even know if they ever happened. We have data, so we like that. But even though it happened, the question is more about the future, because in the future, the subsidy will be lower because we have halvings every 4 years. And this behavior can only increase because the transaction fees will be more and more important compared to the subsidy, and the volatility of transaction fees will be more and more important. So now, the miners are supposed to be honest, or better say, rational economic actors. So, profit maxes, they have a business, they need to make money. And as long as making money is equal being honest from the protocol point of view, that's all good. And that's true, but also, and maybe you might be very concerned about this for the long-term security of Bitcoin. But I don't think it's that simple, because rational economic actor might also maybe have a longer term view. Maybe, yes, it's true, it's you make more money in the very short term if you do this kind of reorgs. But maybe you have also other incentives, and maybe there will be entities. This is not my idea, it's a thing that people say, and it has some sense that in the future these big entities with strong interests in Bitcoin being successful will mine even at a loss. So that would be what the rational economic actor would be. I need Bitcoin to stay strong, and to avoid that people attack Bitcoin, I will keep the security of Bitcoin high, mining even at a loss. So that's still a rational economic actor. It depends how you define it, but that's a possibility. You shouldn't just assume that everybody is maximizing instantaneous profit only, right? We will see, but let's say that this doesn't work and there are no such economic actors willing to mine at a loss or whatever. We need to incentivize miners in a way that is more robust than just transaction fees. And there are possibilities. So this was an interesting presentation, and the Bitcoin++, BTC++ consensus recently held this conference. And Peter Todd here talked about Demurrage as a soft fork or Emission as a hard fork. These two things are both possible, and honestly, they make sense. Now, I understand today is for some even sacrilegious to talk about it, but they actually make sense. So I will just briefly introduce what they are. Demurrage soft fork means that if we need a pool of tokens of BTC to incentivize miners, they could come from, basically taxing long-term savings or held Bitcoin. Basically, some of your BTC is taken aside, depending on how much BTC it is and how much time passed since the last spending. And then you put all this BTC in a pool, and a part of that the miners can spend over time. So this works as a soft fork. This is important. There will never be more than 21 million BTC in this proposal. And that's one way to do it as a soft fork, to keep a reserve of BTC to incentivize miners. The other way is the hard fork Emission. So basically this means that instead of doing halvings until we go to zero, subsidy of BTC, we have a long-term Emission of Bitcoin, meaning that we keep, and the question there, and it will be extremely hard to find an agreement, but maybe we keep having, I don't know, whatever that is, 1% of inflation or issuance per year, 0.5%, 0.1%, whatever that is. And in that way, the miners have still an incentive to keep mining. And honestly, I think it's reasonable. It will be extremely hard to find an agreement on this. Maybe it will never happen, but it's a good idea. Or at least it's an idea worth talking about it. And this is a good presentation. And if you are worried about the 21 million limit, you should also consider that coins get lost. And, if you think that 0.1% of all BTC is lost one way or another per year, and you have a Emission of 0.1%, then you are not really inflating Bitcoin. So good to think about. Anyway, good conference, good presentation. Next, discovering cryptographic weaknesses with Claude. This is Anthropic releasing how Claude Mythos Preview found vulnerabilities, or anyway, attacks on certain cryptographic algorithms. The most important is Hawk, because this was very impactful. Hawk is it's a lattice-based post-quantum digital signature algorithm that arrived at the third stage of the new contest from NIST to add more post-quantum crypto, more standardized post-quantum crypto on top of what we already have with the Lithium, Falcon, Sphinx. And Hawk was considered nice because it's also lattice-based crypto like Falcon, but and the Lithium. But the nice thing about Hawk was that it used only integers, not floating point arithmetics, and this was supposed to make the implementation more reliable, or anyway less prone to bugs, easier to verify, and so on. Hawk, what I want to say is that Hawk was a strong candidate with nice properties and so on, but unfortunately it was broken. Now, not completely broken. It's an attack that basically reduces the security of Hawk at specified parameters. So in principle, you can change parameters to achieve the same security that you thought you had before this attack. But by doing that, you had to increase the size of the signature, or anyway lose some of the properties that made Hawk a strong candidate. So in the end, the authors we withdrew from the contest, and Hawk is not anymore part of this contest to find more digital signature algorithms to add to the to the standardized post-quantum crypto. So Hawk is gone, and that was huge to see that Mythos is that good. So we have here more details on how they did it. The attack, or anyway, this discovery required 60 hours and $100,000 in API cost. Yeah, it's not that much compared to the impact, because, people were trying to find attacks on Hawk all this time. Of course, also using AI. And this worked. So 100,000 in API cost, and all the setup and harnessing to get the agent up to speed. And it worked. For me, it was also crazy or interesting to see how, after setting up the agent and all the harnessing, the agent was basically going and keep going. But at some point, it was also a bit lazy, or trying to circumvent the problem and trying to say, no, it's impossible, I don't want to do it, try to find workaround. And then basically the Anthropic researchers, they had to basically encourage this agent. 3 prompts in during these 60 hours, only 3 prompts, and they were like, no, don't say it's impossible, keep trying. We want to find new attacks. Don't try to change. We need to find an attack. We need to publish a paper. And, this strategy worked. No, please, don't go for the low-hanging fruit. We need proper research. This was insane. I mean, it works. It was the right thing to do. But it was super interesting and nice of Anthropic to publish this, to show the strategy. And here we have also all the chain of thought of Claude. It's really super, super impressive. Like, when you think you have seen enough, there is something that impresses you even more. So nice. By the way, they also talk about Poseidon. It's good, interesting to Ethereum folks, Ethereum people. But no further details. This is probably not a huge attack. But I have also this tweet, this thread from Matthew Green, interesting for more takes on this attack. And what was important to me, Hawk is not a deploy scheme. Yes, maybe I did say that. Yeah, I said that. Many of these algorithms in the contest, from East, it is expected that they will break. So it's not like this had an impact on real production crypto, of course. But what was interesting to me is that, where is it? It's here. AI is not the only thing breaking Hawk. Some other researchers recently produced a similar result. They admit Claude's is a little better, though. So, I guess we are not yet at the stage of Claude doing things that are impossible for crypto analysts, but this is huge. What happened is huge, and it means, the good side is that we will continue basically attacking all these candidates, and whatever is left, if it resisted to strong crypto analysts together with AI, probably whatever is left, it's actually safe, and we can move to post-quantum crypto using only really safe cryptography. So I like to see the good side of this. Then next, and we stay on quantum, amazing, very nice. We have update to the new, so there is this new consensus algorithm for Solana, Alpenglow, coming very, very, very soon. Alpenglow is very nice, very fast finality, and good performance in general, and an actual consensus mechanism with clear properties of clear security properties, more formal, let's say, than what we had before. And Alpenglow is coming very soon. But the thing is, Alpenglow is not post-quantum ready, but we now have this update on the Alpenglow white paper, and this corresponding article. It's QuantumGlow, so it's the post-quantum version of Alpenglow. And yeah, that's really cool that we know this now, because we're thinking, what will Solana do for consensus? And now we have this plan, proposal, and design from ANSA, the authors of Alpenglow. And yeah, that's what we have right now. So what do we have here? This is AX or AX, not sure how they pronounce it. Yeah, maybe AX, Alpenglow XMSS. So the core signature here for consensus is hash-based crypto. It's a variation of XMSS, and it's stateful hash-based signature scheme. So every time I hear stateful, yes, I'm happy, relatively small signatures compared to a stateless scheme. But also, I feel worried. Because, stateful, like one-time signature. Yeah, to be very careful not to sign twice with the same, for the same public key, for the same one-time key. Now, the good news is that, like in the Ethereum case, we are not that worried about stateful hash-based signatures, because you have a clear reason not to sign with the same key. You should never do double signing anyway. So you should have everything already ready to take care of not doing double signing, because double signing in Ethereum, you have slashing by consensus, like in protocol slashing. Yeah, in Solana also, you shouldn't do it. So that's supposed to work. And the other big thing is that Alpenglow was supposed to use BLS signatures for aggregation of votes from all validators. So when you to participate in consensus, you receive all the votes from the other validators, and you have an idea, basically, of what should be the next block. And what was the idea before was to use BLS and do signature aggregation. Now, the problem is that hash-based signatures cannot really be aggregated, because there is no algebraic structure that helps to do aggregation at all. So how to deal with this? And Ethereum went in the direction of using zero-knowledge technology. So you prove and verify the existence of all these signatures and the fact that they're valid. And that's how they do aggregation. It's not really aggregation. You're not aggregating the signatures, but the effect is the same. You are convinced that the signatures are there. What Solana is doing, or QuantumGlow is doing, is they don't aggregate the signatures at all. There is nothing that is like an aggregation step here. And yeah, that was interesting to me, because there are two different approaches. And this also works. And what are the results is that in the end, QuantumGlow is as secure as Alpenglow in terms of liveness and safety. And the performance is also good. The latency for finality is really comparable to Alpenglow. So that's awesome. Now, of course, it's a new protocol. So more work needed to be sure that everything is all right. But this was very nice, very impressive. So let's see. But good news for the post-quantum transition of Solana. And next, the final is sadly, sad news. But yes, Coldcard. Yeah, some BTC was suddenly swept out of wallets in self-custody using this device, and in particular, this device running a specific firmware. And the question was what happened? And they published a postmortem. And in the end, what happened is bad randomness. So this is really what happened. This hardware wallet, and if you just used the randomness coming straight away from the device with a certain firmware. The seeds that were generated were not as random. They were not really random, or anyway, the randomness could be reconstructed. And the security of this was actually very low. And this was really devastating to read. But basically, what happened is that during an update to the code, to the firmware, to move to Bitcoin Core's elliptic curve crypto, the standard implementation, let's say the Bitcoin Core implementation, what happened during this transition is that the randomness that was custom built for the hardware wallet was replaced by the randomness of MicroPython library, and that was not built for a Bitcoin hardware wallet or a crypto hardware wallet at all. It was not secure at all to use, but this happened by mistake, a catastrophic mistake, a really catastrophic mistake, and that's all that happened. Bad randomness. Unfortunately, very, very sad. The source code was available, and the company says also they ran AI models to check the security, but they didn't find the bug. But some attackers found the bug. So, very, very sad news. I've seen people saying, this is the end of self-custody. Well, and of course, I disagree with that. This was not a failure of self-custody as a concept. This was a catastrophic bug. That's what happened, a catastrophic bug. And I think it's always good to maybe diversify in general. I don't want to go too much into that, but it is possible to do self-custody. It's if that's what you want, and it's good for you, and it's good for Bitcoin, if that's your belief, you shouldn't be discouraged by this incident. That's what I want to say. And there are ways to do safe self-custody. But that's all for this week. It took maybe longer than what I expected, but I'll try next times to be more concise. I hope you found this interesting, and if you want to talk more about any of these topics or more, or suggestions about the next videos, feel free to interact. You can contact me here on X, anywhere, and I'm always happy to talk about these topics. So thank you, and until the next time, bye-bye.